Morning traders, it's the 19th of December. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, good. Thank you, Joe. How are you? Good.
Yeah, not too
Good
bad.
footballing weekend.
Oh, it was
Nice World Cup
fantastic.
final. It's
It was
great, wasn't it?
absolutely amazing. I think we should just bin off the charts today and just talk about that. So
Yeah,
good.
exactly. Never have another World Cup final again. I don't think.
No, I think we should just retire it at that point.
Yeah.
Absolutely brilliant. Not sure about the bra that Messi had to wear at the end, but yeah, it was
Luckily, I
incredible.
didn't see that. Did he have to wear a bra?
They
I'm,
put some sort of cloak on him at the end, which I found very bizarre. All he wanted to do is stand there in his proudly in his Argentinian shirt, and he had to wear some silly outfit.
oh, really? Oh dear.
Yeah.
Mm.
Anyway, right, let's get on with it, shall we? Let's talk about markets, what's been happening over the weekend and into this week. Latest headlines on the screen now. So first up, we had Eurozone confidence edging higher. The Eurozone PMI manufacturing index edged higher to 47.8 for December from 47.1 previously and above the consensus forecast of 47.1. The UK services beat expectation as well. We saw the UK PMI manufacturing index dipped to a 31-month low of 44.7 from 46.5, and the previous expectations of 46.5. In contrast, there was a recovery in the services sector to 50 from 48.8. US contraction of the PMI deepens. We saw that dip to a 31-month low as well of 46.2, and all of this combined dented risk appetite, and we saw that slide on Friday with the weaker than expected numbers on the US economy. We saw equities decline by 1.3% on the S&P 500 index. So pretty mixed tone across the board. The dollar posted net gains on Friday against the European currencies as risk appetite deteriorated, but there were some overall performance was pretty mixed across the board. There was a decline in sterling shorts. So the latest data recorded a decline in non-commercial short positions in sterling below 26,000 contracts from over 28,000 a week previous, and it's the smallest short position since March. Been some rumours over the weekend that the Bank of Japan will be considering revising the inflation target next year to give the central bank more flexibility in meeting its 2% target. There was also speculation that the shift would result in the central bank pursuing a less aggressive monetary policy. And the next decision on that comes overnight at 3 o'clock UK time, 3 a.m. that is. So we can expect a fair amount of volatility potentially leading up to that and as a result of the data release itself. So let's have a look at some charts. Steve, do you want to kick us off with a look at Bitcoin?
Yeah, sure. Just let me share the chart. Here we go. Bitcoin under pressure towards the end of last week. We can look at the daily chart. I've cleaned it up a little bit because it was getting a bit messy. Big resistance all the way up above 21,000, 21,500, but we're down under the previous support. Now has become resistance. We managed to get up to 18,373. That was last Wednesday, and then we formed a evening shooting star formation. As I said on Friday, that was a really bearish formation. I was looking for a break low, which did happen. So this puts price action back in the doldrums again for Bitcoin. I think there's further downside expected this week, looking at the potential here for a very short-term bearish flag. Probably see it a little bit more on the 4-hour chart. Let's get rid of that blue support line. That's no longer there. Yeah, so we're just looking at something a little bit like this, just a short-term bearish flag. Hasn't broken down yet. You'd wait for it to break the bottom of that flag, and then you're away. And the potential is for a return back down to this the lows, because you've got a measured move target, obviously. Well, let's do it from the fib. That's a better way of doing the measured move target. We'll do it to there. There, the measured move target is 15,257. So that's if it does break. Got to be patient with that one. Obviously, we know what Bitcoin's like. It's not doesn't trade as normal markets do. Taking a look at gold on the commodity front. Let's take a look at the daily to start with. And again, it's quite a confusing looking chart. But we've got this double bottom formation that we're really looking at. The measured move target for that is 1844. We did have an attempt higher on that last week. On Tuesday, we got up to 1824 before paring back those gains. However, Friday finished quite positively. We made back 50% of Thursday's losses. And we're on the front foot this morning. We're above the 200-day moving average. We've got this area of previous resistance, which we did manage to break through above. So I'm just leaving it in there for the meantime. We've got this pivotal area at 1765 to 1770, which we failed to get down to. So we've posted a higher low. So and we've got the crossover of the 5,500-day moving average, which is quite significant. And yeah, I'm sort of overall remaining mildly positive on this one, but it's all really down to the dollar and what the dollar does. Inverse head and shoulders on silver. Again, measured move target 24.92. We posted a bullish hammer style candle on Friday, so that's a nice recovery Friday, and we're off to a decent start this morning. So all looks pretty positive for that. Joe will come on to the dollar index, but as you can see, we've had this crossover on the dollar index, the 5,500-day moving average crossover, and we're below the 200-day moving average. So overall, the dollar potentially still has a bit more to go, but Joe will let us know a little bit more about that. On the crude oil, we had Thursday, Friday, finished quite negatively on the week, Thursday and Friday. We had a little bit of an attempted rally today, got up to just below the $76 mark of the WTI crude oil and failed, reversed sharply lower. Friday's low will be interesting, 73.36, a break below there should open up a return to these lows that we saw from the week before last. So under pressure, Brent crude oil, same price action, different levels. Again, the level to watch on the downside, 78.54. On the upside, the highs we made last week around about 83.20. But yeah, definitely negative on the oil at the moment, energy markets. Also, natural gas. This has had a real humdinger of a move over the recent sort of like month, really. We had the big sell-off since sort of late November. We had the break, the gap down lower Monday the 5th of December. We had the gap up higher Monday the 12th, and we had a gap down lower this morning, but we've managed to fill that gap already. But this is turning out to be quite a key level around the 620 area. Further, the overall formation for me looks bearish. Head and shoulders formation, neckline is down at 533. Really need to break below there to see this formation play out really nicely. The measured move target for that is really down. It's a lot lower down in the doldrums. It's in front of zero. I mean, it can't go below zero, surely, can it? Oil did. Yeah, that's about it on that. Joe, I don't know if you want to show us where the dollar's going, then we might have a better idea.
Yeah, okay, let's do that. Let's take a look at the dollar chart on the daily to start with. Just bring that up. So pretty much as we were, really, still looking for the dollar to be trending low. We did see a couple of days of strength last week. We had a little bit of a poke above this short-term downtrend that has formed on the dollar chart, but we're back below it today and engulfing all of the gains that we posted on Friday so far. So obviously quite early in the session, but down by around about 0.5%. So it looks as though the trend is resuming there. Still looking for lower prices towards at least this 50% fib level, which is at 102.15, and we've got highlighted in yellow. Big band of resistance here. We've got the neckline of the head and shoulders top and a number of key lows previously that have acted as resistance. So it looks as though we're going to continue to see prices reject in this kind of region here and ultimately drive lower, having formed this obviously head and shoulders top pattern. Looking at euro US dollar, we can see that this was rejected at trying to break through this level of resistance here around 106.52, posting this reversal candle on Thursday, following that up with further losses on Friday, but again trying to engulf all of those losses that we posted on Friday and push higher in line with what we've just seen on the dollar chart, expecting more weakness there, and I guess therefore we can expect to see more strength here. So we saw a nice pullback into some support at 105.95, and providing this holds, it looks as though we may continue to move to the upside. Certainly the trend at the moment is favouring the bulls. So looking for higher prices, but again, wouldn't it be Too concerned if we did see a deeper pullback, maybe into this kind of region at 103.50. Ultimately, there'd just be a point where we could get some consolidation, acceptance of price up at these higher levels, and then maybe continue pushing higher. Looking for the 50% fib here at 109.42 on the upside. Looking at cable, that's up by 0.5% already as things stand. It rallied into a major resistance level at 124.30 before rejecting quite significantly. Prices pulled back. There is some support around 120.28 or even more locally at 121.12. So expecting prices really to find a bit of support here in line with the short-term uptrend and then continue pushing higher potentially. If we can get above these resistance levels that we posted last week at 124.30, then we're opening up potential for a move to the 61.8% at 27.57. So have a look at dollar yen as we've got these rumors circulating about what the Bank of Japan are going to do. We can see this is continuing to trade within this downtrend channel. Prices rallied into the upper end of that at 137.65. Prices have gapped lower today and looks as though they may continue to move lower as well. We've got major support coming in around 131.50 to 131.25. So I'd be looking really to sell rallies on that, expecting lower prices towards this level here and for prices to remain trapped within this bearish channel for the time being. Any other currencies people want to look at?
New Zealand dollar, US dollar.
Okay, let's take a look at that.
Sanadid wants to look at that.
So indeed, we were looking at a bullish channel here. Prices remain within it for the time being. We have seen a rejection at this 0.6468 level. So we saw a swing failure. We tried to get above this level. We also had a 50% fib level at this level as well at 64.88. So prices have pulled back. I'd expect any pullback to be capped probably around 62.57. For the buyers, maybe step back in. It is on the front foot today, but it isn't performing as well as some of the other currencies linked to the US dollar at the moment. But New Zealand dollar has been pretty strong of late. So while it continues to trade within this bullish channel, I'm still expecting higher prices on this over the short to medium term. So yeah, any pullbacks towards maybe this level, I think would be a reasonable opportunity to buy.
Nice
we can
one.
take a look at Aussie US dollar as well. Actually, charts are a little bit messier on this, but it looks as though we were trading in some sort of ascending wedge and broke down through that last week and trying to retest from the reverse side of this now. So it'd be interesting to see if we can close back inside this wedge pattern or not. If not, then it looks as though prices may continue to decline lower. So Aussie under a bit of pressure against the US dollar, and I guess that's the same situation with Aussie versus New Zealand dollar. We can see here, this was trading in a really nice bullish channel. Then we formed a head and shoulders top. Then we've seen a number of continuation patterns and a big move lower with this last week on Friday through this major level of support that we had at 78.6% fib. So looking pretty bearish indeed. So still looks to be favouring New Zealand dollar over Aussie dollar at the moment. Is there another comment there? Oh, dollar Swiss. Let's take a look at that, shall we? Okay, so this was trading in a nice range. Then we broke down below that range, the lower end of that coming in at 93.72. So while below that level, I think we will now look to sell into retests of that level, expecting lower prices. We've also seen a break of this uptrend that's been in place since back in January. We've also got a 61.8% fib level, which comes in at around 92.88. And as we can see back here on the left-hand side, there are a number of previous swing highs and swing lows in here. Big area of resistance, which seems to be capping the downside for the time being. But I would be looking to sell into rallies towards 93.70 in the short term on that. And thank you very much for those coins as well. Is that from Sanadid?
Yeah, it is, mate. Yeah.
Lovely.
Nice,
thank you very much.
Let's take a look at indices now. I'm sort of like the jury's out on indices for me, Joe. I always like to get a little bit, I'm the big bad bear when it comes to indices. But obviously we've got the Santa rally. I'm not going to fight Santa, so I'm going to wait till maybe the new year to sort of like take a real sort of like more of a aggressive downside look at these. At the moment, it's looking pretty positive from the moving average perspective. Not so much maybe on the candles or the rejection of the recent rally. We've got the like crossovers. We've got like 55 crossing over the 200. That's like a golden cross That's a really, really positive long-term sign. So that looks supportive from that perspective. So below we have got decent support all the way between 32,100 and 32,500. That's the real sort of like support level for me. And if we stall there and react higher, then that will be good because that'll post a higher low compared to the 3rd of November spike lower. The same, well, not the same. The same with DAX. I was going to say the same with DAX. DAX is looking exactly the same. We've got this crossover that's happened over the last couple of days. We've got a golden cross. That's a positive sign, but we have had rejection from the highs. We've got a double top formation in place now. Let's move that over there and take the neckline down to here. Let's get a measured move target for this double top. We'll take it from this point. There we go, 13,781. We stalled just in front of it on that double top formation. So we could say that that formation's done. Maybe we're not going to make it all the way to the measured move target, but we got very, very close. Today's price action has been pretty positive. We started off lower and we've nearly engulfed Friday's body of candle. And especially with this golden cross, I'd be quite positive on the indices. Oh dear, what's going wrong with Steve? The 200-day moving averages managed to support the FTSE price action as well. Broke through it on Friday, but closed close to it, and we're above it again now. Again, we're getting this move higher in the moving averages. The 55 aggressively looking to take out the 100 and 200. So maybe the Santa rally does start this week. Taking a look at NASDAQ, doesn't paint the same story at all. We've broken down below the neckline of this, we could call it a treble top. So this is a negative formation that we've got to look at. And we can get a measured move target coming in at 10,716. So could really sort of look at maybe buying Dow, selling NASDAQ, or even the S&Ps is under pressure. This is like we've had rising highs, so higher highs over the last month, just over, but we've just broken down below the neckline, the swing low between those rising highs, and that comes in at 3,904. So that's under pressure, although we're off to a good start this morning. So a bit of a mixed bag overall for the indices. It depends what sort of like sector you're looking at. But the technology side of things isn't looking great. The S&P isn't looking great, but the Dow's looking not so bad. Take a look at China. We've gone sideways for the past 2 or 3 weeks, and today's price action isn't looking great. We've engulfed pretty much all of Friday's price action, and under a bit of pressure. There's a little bit of a supportive line coming in here around about the 13,000 level. That'll be a level to watch. Hang Seng, looks like these shooting stars are rejecting moving away from the 200-day moving average. So again, that's under a bit of pressure. So I'd look out for the headlines this week. I think we're going to get plenty of volatility and yeah, plenty of two-way opportunity over the next week on the indices.
Cool. Thank you very much, Steve. Okay, let's take a look at the gun to the head challenge then. So this is where Steve and I pick trade ideas live on the video as if we had a gun to our head. What would we trade right now? All of the ideas that we come up with must have stops and targets. They're all placed at market, and they'll expire at 9 p.m. UK time or when the stops or the targets are reached. And they're published up to our TradingView profile. So if anybody wants to check them out, you can do so at signal_center. So let's take a look at last week's trade ideas on Friday. I was looking for a bearish flag on New Zealand dollar versus the US dollar to play out. Sadly, it didn't. It just ground up to the stop and has continued to move higher. So a 1 hour loss there. But Steve, within record time, I think, he was looking at a 15-minute setup here on Bitcoin. Let's just have a zoom in. And if we click the play button, we can see that it went straight to his targets.
It didn't take long, did it?
No. Well,
I felt a bit cheated.
15-minute car took half an hour for you to hit 3-yard winner.
Yeah, not bad, is it? I mean, it was a very tight stop, and generally in Bitcoin, you have a 100 tick stop, you normally get stopped out. I think it's a little bit more than that, but yeah. So yeah, felt a bit cheated because I didn't have to sort of like stress about it all day. It was all done and dusted.
They're the best trades,
But
right?
yeah, I suppose so. Suppose so, unless you enjoy being, unless you're a bit of a sadomasochist, is it? I don't know.
Yeah, that'll
Unless
do.
you quite enjoy being sort of pulled apart by the markets.
Yeah, well, that was a spectacular win, and obviously could have been a lot more if you'd got even more aggressive. But I think that was probably the right thing to do, and yeah, nailed it. So well done, Steve. That means you
Cheers.
get to go first today,
Oh, lovely. Okay,
unless you want me
well,
to. You want to hand
no,
it over?
I don't mind actually. So price action in the Dow, really. I'm sort of, as I say, I can't ignore the oh, messed that one up, Stevie boy. I can't ignore the sort of 200-day 55, the golden cross basically on the charts. I've got to sort of like do something with it. For me, this is technically a very strong turnaround, and we seem to have run out of a little bit of momentum towards the end of Friday. So potentially we could get a little short-term pullback, Santa rally and all that. So yeah, looking maybe for something like this to play out. Bit of an inverse head and shoulders formation. So let's go with this. This is on the short-term chart again. Remember that this is all a bit of fun. And I'm going to have quite a tight stop. Right, we're getting long at 33,012. 32,812 will be my stop. And my target will be, let's go for a move back up to here. Why not? 500 tick target, 2.5 to 1 risk reward. That wouldn't be bad, would it? That wouldn't be a
Sounds
bad
nice.
start to the week. Okay, I'm going for that. I've got quite a tight stop and looking to target a move back to resistance levels. Let's take a look if we can get some sort of fib going as well. Give a good reason for this, not just picking a number out there. 38.2% fib retracement. That'll do, donkey. There we go. That's job done. I feel like I
Lovely.
can sort of like, I'll see you tomorrow morning then.
Yeah, absolutely. Okay, best of luck with that, Steve. I'm going to take a look at Aussie yen. So let's take a look firstly at the daily setup to build into this as to why I'm coming up with this idea today. So it looks to me like it is in the process of forming some sort of top here. I've got head and shoulders drawn on here, hasn't completed it yet. Neckline for me is probably between these two levels here at 90.80 to 90.52. It is an upward sloping one, and arguably that's being tested right now. But I think there is potential maybe for a short-term bounce here. And if we take a look at the intraday charts, it might be a little bit clearer. We can see that prices also gapped lower this morning, and the gap has already been filled. But there is a swing low here from the lows that we posted earlier in the month in December, on the 4th of December. And we can see that prices tried to break down through that level earlier today, but failed to do so. So we've got a bit of a swing failure there where prices have tried to break down below the previous swing low, haven't managed to do it, and closed back above the level. So I'm going to try and speculate on a move to the upside. It's currently at 91.25, targeting a move up to 92.02. And I've got a stop loss at 91.04, which gives me a risk reward ratio of 3.29. So very happy with that risk reward ratio, providing that it can obviously stay above this level here. So I'm going to go with that, buying Aussie yen for a speculative bounce. It's ready to go, and I'll get that published up right away. When I started doing it, the level was a little bit higher. So I get a bit of a better entry, and I'll get that published right away.
Nice one, Joe.
Okay, data-wise today and overnight, let's take a look at that. So we've got the German IFO index, which is due out in 35 minutes. And then we've got overnight the Bank of Japan policy decision, which is at 3 a.m. UK time. So expecting plenty of volatility. Already a few rumours circulating that there'll be more flexibility on the inflation target and that they'll be less aggressive in their monetary policy stance. So could create some wild volatility as a result of that. So if you've got any yen exposure and you're carrying that overnight, do be aware that these numbers will be coming out, or this policy statement will be coming out. Later on in the week, we've got the US consumer confidence that's out on Wednesday. I'd imagine it's going to be pretty light this week as we approach, obviously, the Christmas period. Steve and I will be streaming all week up until the 23rd, and then we'll be breaking for Christmas and be back in January. Okay, Steve, anything further to add?
No, all good, thanks. Have a good week,
Perfect.
everyone, and we'll see you tomorrow.
Indeed. Have a good one. Take care.
Cheers.